You, like every other economist that Bloomberg surveyed, expected a sixth straight rate cut from the RBI. The comments that we've had from Shaktikanta Das is that they're waiting to see the real impact of monetary policy so far. Given the signals that we've had from his news conference, when do you think we might get another rate cut? Is the easing cycle still in place, in other words?
So as you said, today's rate decision was indeed a very surprising one. And what it does is it shows that the RBI has once again changed its goalpost and its forward guidance, and it is flip-flopping between earlier saying that growth was a priority for the RBI, and now once again switching to inflation as a priority. So given the inflation and growth dynamics going ahead, my sense is that even in February we are looking at another hold. But beyond that, there might be further space available for additional monetary policy easing, as the RBI itself has noted in the policy statement. But this is overall negative for the growth. And today's policy decision is certainly inconsistent with a further downgrade to fiscal year 2020's growth forecast to 5%. And it needs to be seen that the growth is further downgraded first in the October policy to 6.1% for 6.9% earlier, and in today's policy it has been downgraded even more sharply to 5%. So 190 basis points reduction in full year growth projections is quite a serious affair.
Yeah. So you say February we might get another hold from the RBI. The other thing, of course, that Shaktikanta Das has emphasised is the need for fiscal policy to work in tandem with monetary policy. You say, in terms of the growth impact of a hold now and a hold in February, Abhishek, what sort of easing cycle will we need beyond that from the RBI to actually support growth sufficiently, along with what we know we're going to get on the fiscal side?
See, overall, if you look at the real economy, things are starting to turn around. But one needs to take into account the severity of the current slowdown. So potential growth, according to my own estimates, stands at around 7.5% or so. Currently, growth is at about 4.5%. So that's a very, very sharp downturn in the economy. And even if the economy starts to recover from here on, lot more stimulus is needed for the recovery to be sustainable and to close the negative output gap. Today's decision signals that the RBI seems to be in no hurry to do that, and that bodes unwell for a sharper recovery. So my sense is that we will continue to see a recovery, but it's going to be shallow and slower going ahead. And it's only going to deal a bigger financial shock because financial markets do take the RBI policy decision and give it a slightly more undue, higher weightage than other policy measures. And from that perspective, it bodes unwell, and it's only going to increase the trust deficit within the financial system.